Inventory is 38% higher than it was last year in Orange County. Homes are taking longer to sell, and interest rates have been fluctuating. So what does this mean for both buyers and sellers who are thinking of getting into the market in Orange County? Well, that's exactly what I'll be going over today on my March 2025 housing market forecast for Orange County. So let's go ahead and get into it. Okay, so like I said with all these monthly episodes, I'm not going to bore you with a bunch of data, but there are some key things that you do need to know about to better understand where the housing market is heading right now in Orange County. So the first thing you need to know is inventory right now is sitting right around 3,300 homes. Now, just to give you some context, last year at this time, we were under 2,000 homes. So there is a lot more inventory on the market for buyers to choose from right now. Now, for the month of February, demand also picked up a little bit. So we sold a little bit less than 1,500 homes in February compared to the month before, which was a little bit less than 1,300 homes. So demand is also increasing as well. And these are both common things to see as we exit the winter market and start entering the spring market. Now, the second thing that a lot of buyers and sellers both want to know is, are homes appreciating in Orange County? So if you take a quick snapshot of the last 500 sales in Orange County, 50% of them closed for at or above asking, and 50% closed for below. So right now, the market's at a pretty good equilibrium where you're not really seeing a lot of appreciation in the market. Now, just to give you some additional perspective, if you look at the month of January, so the previous month, 43% of homes were selling for at or above asking price. So we did see that increase, and that's expected as we head out of the winter market and closer to the spring market. Now, when I was looking at the data for the month of February, the thing that caught me most off guard is how fast homes were actually getting into escrow in the month of February. So if you look at February, 50% of homes went into escrow in less than 2 weeks, and that was up from 32% the previous month. So the market was definitely moving significantly faster in February than it was in January. And if you take that out even further and look at how many homes went into escrow in less than a month, it went up to 66%, where the previous month was 53%. So during the month of February, we saw a lot more activity in the housing market, a lot more sales getting into escrow at or above asking price, and at a much quicker pace. In fact, the median days on market to start out the month of March was 35 days, where if you look at the beginning of February, it was at 49 days. So the market definitely sped up during the month of February. Okay, so that was the month of February. So what should we expect going through March? Are these trends going to continue? Are we going to see the housing market continue to heat up? Well, here's where things get a little interesting, because as we're starting to see this day-to-day data come out, it does look like both supply and demand are continuing to rise right now, but supply is going up quicker than demand at this point. So I wouldn't be surprised to see the market slowly cool down over the next couple of weeks, because we are seeing more home sellers hit the market than home buyers enter the market. Now, the biggest factor that's going to throw a giant wrench into all of this is interest rates, because interest rates have been fluctuating a lot over the last 2 months. So in the middle of January, we were up at 7.25, and currently, as I record this, we're at 6.64, the lowest that we've been since October. So theoretically, this should allow more buyers to enter the market, because buyers' affordability just went up by about 6% in less than 2 months just from the interest rates going down alone. Now, the biggest unknown in all of this is, are these interest rates going to continue to drop, or are we going to see them shoot back up again, making it less affordable for buyers? And as always, interest rates are one of the hardest things to predict where they're heading, and these new tariffs that were just announced that are going into effect definitely shake things up a little bit as well. So it's really going to be dependent on the economic news that we see over the next couple weeks. So as I'm recording this, the jobs data is going to come out later this week. By the time it's released, that jobs data will probably already be out. So if we get that jobs data and it looks like unemployment is going up, that will typically further drive down interest rates. However, if the job data looks good and it looks like more people are unemployed, then that could drive interest rates back up. And then next week, we have the inflation numbers coming out. So depending on what that looks like, if it's above or below market expectation, that could also swing interest rates as well. So it's really hard to say exactly where the housing market is going to go over these next couple of weeks. A lot of it is going to depend on what those economic reports show over the next 2 weeks. Once those come out, then we should have a little bit better understanding of what we should expect over the next couple of months. But until then, it's kind of up in the air if interest rates are going to continue going down or if they're going to bounce back up again. Now, if interest rates do start going down, especially if they get below 6.5, which we saw back in September of last year, that's typically when we start seeing a lot more demand into the marketplace, and that can continue driving demand faster than supply, and we can continue seeing the market heat up over the month month of March. However, if we see interest rates start to shoot back up towards the 7% again, and inventory continues to hit the market as fast as it has been, you could see longer times for your home to get into escrow, and it's just going to take a little bit longer for everything to sell on the market. Now, does this mean we're in a buyer's market? Absolutely not. But it does mean that we're getting close to a balanced market, which is really what we need after these last couple years of chaos, where both buyers and sellers are going to have similar footing in terms of negotiation to be able to get into a home. So buyers are going to have more options to choose from. Sellers are going to have to be a little bit more patient, and oftentimes they can't expect their house to go into escrow during that first weekend. Yes, homes that are turnkey in a good location and priced correctly will still go into escrow a lot faster, but it might not get 10 offers on the home anymore. It might be 1 or 2 offers, and it might take 2 or 3 weeks to get those offers to get your house in escrow. So sellers, you want to make sure you adjust your expectations accordingly and just understand where the market is right now. Now, on the buying side of things, again, we're not in a buyer's market where you can throw in offers $50,000 below asking price and sellers are going to jump to accept it. We're not anywhere near that point right now. We're still in a balanced market. You still need to offer something that is around market value, and depending on the other parts of the offer and the different terms that you put in, you're probably going to have a little bit more negotiating power than you did before. When it comes to negotiating repairs on the home, when it comes to leaving your contingencies intact, protecting you more while you're in escrow, you're going to have more options to do so this year than you did last year at this time. Now, if you have been thinking of buying or selling a home sometime in the next couple months and you really just don't know where to start or just have a few questions, I do offer a free 15-minute discovery call. You can book it with me. You can look in the description below or the link in my bio, depending on where you're watching this. But book 15 minutes, get your questions answered, and have a better understanding of what's happening in the market and how it's going to impact you personally. So check out that link, find a time that works for you on my calendar, and I'd love to have that conversation with you. And if you aren't quite ready to pick up the phone and have a conversation yet, but you still want more information about the general buying and selling process, I have a bunch of free guides. Again, you can find below in the description or the link in my bio that will help get some of your questions answered and put you on the right path to eventually have success when you decide to buy or sell a home. So make sure you check those out as well. And then finally, if you want to stay updated on the housing market and how all these different reports coming out are impacting our local housing market, make sure you hit that subscribe button, because I'll continue keeping you updated anytime there's an important policy change that's going to impact you and the housing market in our location. So until next time, stay happy, stay healthy, and I'll see you on the next show. Bye, everybody.